Morning, everybody. Wednesday, so not a lot to update you on from our first workshop of the week. Morning, Neil. Morning, everybody. Hope all of you are well. How are you finding the markets? Mike, all okay? Okay, good. I did hear Adrian Ellison talking about the longer-term charts. I think they have been very productive for a lot of our clients just recently, and that's something I might quickly dwell on myself as well before I hand back. But let's have just a quick look at what's going on. I mean, Adrian's got this pen on. Let's just normal. Right, good. Okay, let's go to our... Right, okay. I think we started on Monday with economic recovery on the ropes, I think was one of the headlines from the FT. I want to leave that article up there because I want to come back to it, but let's just open up another window. And if I go to global economy, I seem to remember seeing pretty much the same reference here. Shares struggle on global growth fears. You know, what's really happened? There's been some key policy announcements in September. The markets did really, really well. And, you know, I have to say, you know, this is just something that now needs positive news to support the moves that we've had. Markets love being optimistic when they can. Generally, people are typically optimistic. They like to look positive on things, but it's rather difficult at the moment. And, you know, we've had all the good news in the markets. We all got excited. If I go to charts and just show you what's going on here, if we look at the FTSE, let's look at the daily and weekly longer-term charts. Find those. Where have we got the daily, weekly, monthly? There we go. Okay, if I look at FTSE, for example, we've had quite a run up. If I look at this is the weekly chart here. Let's so you can see here, like in common with a lot of markets, we had the real sort of fear of the Eurozone breakup that caused the markets to really crater May, June time. Since then, the authorities, the central bankers, governments, the IMF, European Commission, you know, the so-called Troika, they have ECB, they have put all their efforts into ensuring that the markets understand there will be no euro breakup, and the markets have recovered significantly. Despite all the sort of bearish news, I think the bailout programs, the support for the sort of peripheral zone countries in the Eurozone bloc has restored quite a lot of market confidence and has narrowed these spreads, you know, these bond spreads, which are a sign of stress in the market. So the difference in yield, or what you the return on your investment if you bought a Spanish bond compared to the German bond, bunds, has narrowed considerably, so implying there is less strain in the system. But still these problems persist, and that's really what is happening in the markets now. We can see here, looking at the longer-term charts, the weekly charts, that we've had a significant run-up. This is the FTSE, but I can show you the same thing applies in the euro. We're hitting key pivot levels here, 59.30 level on the FTSE. We hit this a month ago. Since then, we've sort of been bobbing around, but you know, we're right at the top of the envelope where momentum is right up the top. Our trend signal line here is well above 75, currently a reading of 83 in change. And that is looking a little bit toppy. If we look at the daily chart, we can see the same thing. The market has run up, top of the envelope, pulled back, had another go, pulled back, and this is contracting. So you can see whilst it is a higher high, it is a higher low. It is now a lower high, and so you could see a pennant forming here, and that's something that could signal some sort of a breakout. If we look at currencies as well, in fact, I tell you what, we'll look at another stock index as well, and you'll see the same pattern emerge there. If I can see if we've got the Dow here, I don't think we have. I'll just go back to this page. Okay, let's use the US 30 here. Okay, same thing with the Dow. We can see this move. It's been a significant move, but we are struggling. You know, we've had the big run up way back earlier on in the year. It's been very, very positive in the States, but we're struggling at the moment. And the move yesterday was very, very significant. Not sure that that's totally up to date. Let's just refresh that. Okay, good. Same thing in currencies as well. If we look at the euro, the key forex markets that we look at, and I'm looking at the longer term charts because we can see how that is playing out, the correlation between the likes of the euro and the FTSE. This looks almost identical to the FTSE, the run up, pullback, and then a retest, but we're turning down now. We can see, it would be interesting to see where we close today, but if this takes out the low here, we really could expose ourselves to further falls. Now, this is all in the backdrop of what's going on in the sort of macro world, as it were, where we look at the events that are causing this, and that's my next sort of focus. We've looked at some of the longer term charts, and you can see that a lot of good news is priced in there. Now we are having to deal with reality, and the reality is not good. Shares struggling on global growth. We've got a lot of politicians and bankers meeting to discuss things this week. No real news that we can trade off per se, but let's just have a look at that. So if we look at our calendar, this is we're only halfway through the week, so looking at Wednesday, pretty light on the data week this week, so you don't have to prepare too much for this week, really. I've removed the low impact bits of news from this, so we're left with very little. The only thing today, for example, is what's called the Fed's Beige Book, which is a summary of economic conditions in the various federal districts. You can click on the detail here and you can read about what it all means and what its impact can be. So that's always very useful. That comes out at 7 o'clock. But really, the key events this week are actually meetings that are taking place. The International Monetary Fund is having its semi-annual sort of get-together. That's in Tokyo. And they've described the confidence as very fragile. It's what they basically call this the semi-annual check on the world's financial health. The IMF said that the euro area's debt crisis was the main threat, and the risks to global financial stability had risen in the last 6 months. So, this is still is a very, very delicate and fragile situation. I guess at least, as I said, the central banks and the politicians have managed to somehow rescue the markets from what was some sort of a downward spiral and breakup fears, but still that possibility still exists, and that's something that these central bankers and economists will attempt to allay. We've also got something called the G7 finance ministers. They're meeting in Tokyo at the same time, so that's Britain, Canada, France, Germany, Italy, Japan, and United States. They meet on Thursday tomorrow, so that's after the IMF meeting today. And, they're very much focusing on what you'd expect, which is the global growth fears. We've seen that highlighted twice this week. That's very much a problem. And this is the chickens really coming home to roost, unfortunately. And the central bankers have played their card, and there's not a lot more, they can do. We've had some pretty poor data here in the UK. I don't know whether you saw the news yesterday. It gave us some good opportunities in cable. A lot of clients trading cable quite successfully yesterday. That was the trade balance and manufacturing production. Not good news whilst the Tory conference is on. Poor production data, poor trade balance. And I think it looks like these austerity measures will have to be prolonged a lot more, perhaps, than George Osborne is reckoning. But it gave some opportunities. I think, the backdrop, with the euro weakening as well, with markets struggling this week, I think has sort of deflected some of the attention away from sterling. But Mervyn King, from the Bank of England, he was talking at the London School of Economics, I think it was the London School of Economics yesterday, and he basically said all this quantitative easing, there's no reason why it can't continue, but he's not altogether sure what the impact is. He said it's going to be fairly limited, but I think the market's cottoned on to this because he's pretty clear that there's no limit to what they can do in terms of quantitative easing. So I think most economists now really expect the central bank to approve more stimulus at November's meeting. And that is something that perhaps caused sterling to slide a little bit more and gave some nice trading opportunities. That's pretty much it, really, for the data on Wednesday. Thursday, as I say, we've got the G7 meeting. There's very little data out this week. We got the US trade balance out at 1:30 tomorrow afternoon. The regular weekly unemployment claims, as I say, but we know there's not much out this week. We can see there's very few red, high-impact bits of data, so please don't get too concerned about that. Then on Friday, we've got probably slightly more important data in the producer price index. That's a bit of data that you should watch quite closely. And then finally, something that is a good leading indicator, this prelim or flash University of Michigan consumer sentiment number. That's expected to be sort of unchanged, and that comes out at 5 to 3. But all in all, a little bit sort of quiet on the data front. Politicians talking, they can make announcements at any time during the day or night. So that's nothing we can really prepare for. But thanks very much for listening. Good luck.